Great, thanks everyone. As you all know, you're here to hear about careers in investment management. A little bit about myself. I grew up in Canada and I went to McGill. I studied Bachelor of Commerce with a focus on finance as an undergrad. And then right out of my undergrad program, I was an analyst in M&A at UBS Investment Bank. From there, I basically had finished the typical 2-year analyst training program and was looking for jobs on the buy side, maybe similar to you guys are right now. And I came across the asset management world through Deegan, which is a fund of hedge funds based in Canada. They transitioned me to a role in New York, fell in love with the city, and moved over to Willett Evisors, which is a family office and foundation for a wealthy family in New York. So between those two roles, it's mainly the roles I've mainly had been investing in funds as opposed to direct investing at a hedge fund or a private equity fund, but have a ton of interaction with both of those types of organizations as well. So the first thing we're going to talk about is just an overview of the industry. It is a bit of a different industry in that it's very fragmented and not as easy to find the jobs such as investment banking. You kind of know who the big players are. With the asset allocation industry, there's actually, a ton of opportunity as well as a ton of money on this side. Pensions are very large allocators, general asset managers at banks, family offices, endowments and foundations, insurance companies, private wealth managers. There's really, a ton of different places where you can find a role. The trick is, I would say, finding the positives and negatives of working at each of these places. Pensions are large organizations with lots of red tape. Family offices can move a little quicker, so finding the right kind of environment for you is definitely something to consider. The types of strategies that asset managers generally look at include private equity, hedge funds, real estate and real assets such as commodities, public market and direct investments. So a lot of that's just putting on bigger trades, sizing up in publicly traded assets. There's also a lot of opportunity in cash management and treasuries, which is not something a lot of people talk about, but trading yield curves is something that a lot of asset managers think about on the insurance side, on the pension side. And then there's the more traditional mutual funds that you and I have gotten to know, I'm sure, over our lifetime, such as Fidelity, and they're generally big and out there, and you've heard of them. The different roles that you can have asset managers are pretty broad. The role that I've worked on is the investment research and due diligence role, where you're sourcing new investments, researching markets, just really doing some deep dives on things to put in the portfolio or sometimes to kick out of the portfolio. You can be an economist, especially these days, everything is related to the macroeconomy. People are obsessed with it, so if you have that kind of background, that's highly valued in the industry. Risk management is another thing that's highly valued these days, so if you've got a quant background, or I think some of you may have a master of science background, that's really something that paramount importance right now. Stress testing portfolios and really putting your math skills to work. And then more generally, portfolio management and diversification analyses, as well as just balancing things going in and out of the portfolio is definitely a more strategic role that you can have as well. And then there's operations. That side of things is more along the lines of making sure you're just not taking any legal risks or things that the investment team may not be thinking about in their background and due diligence. Okay. So how to research the industry. As I mentioned, the industry is pretty fragmented, so it's not as obvious as some of the other jobs you might be looking at. The vault guides and things like that are definitely a good general introduction. I don't think they're something you can rely solely on. You definitely need to dig deeper. The industry itself is just so fast moving that most books can't keep up. So be sure to use your alumni and career centers to just see, where people have ended up from spots similar to you. A lot of alumni, I think, look to recruit people from their alma maters. Evisors is great. I think you've got a ton of experts in many, many different fields. Well, they may know, the right way to approach specific firms in the industry. There's different industry publications that you may or may not have heard of. Hedge Fund Alert is kind of like the hedge fund gossip rag. So you can find out who's launching funds, who's shutting down funds, and it's just a good way to keep up with the industry in general. And every so often they actually publish a list of recruiters that specialize in the asset management and hedge fund world. I think there's a ton of other magazines as well, or periodicals. The Deal, Allborn, Absolute Return is another one that's widely read. But some of them are, more useful than others. But in terms of just getting a sense of the industry, they're all good ones to kind of skim through. Another great source is prime broker and consultant research. All the prime brokers, JP Morgan, Credit Suisse, they publish monthly and quarterly reports on the hedge fund industry. So that's a great way to keep up with what their biggest clients are doing. They're probably not as easy to get your hands on than some of the publications I just mentioned, but if you have friends that work at any of those bigger banks, they're invaluable things to kind of have your fingers on. Another cheaper way of keeping track of what hedge funds are doing is public SEC filings. So due to regulatory reasons, hedge funds and bigger asset managers have to file 13Fs with the SEC once a quarter. So you can just kind of see what trades are in their book and have a good sense whether they're focused on events or focused on deep value. I think you can kind of get a sense from that based on the names in their portfolio, and it's just a good discussion point if you're interviewing. Other sources are the Wall Street Journal, New York Times, Bloomberg, the more typical things that you're probably reading already. And then there's some great books that have been published both before and after and during the crisis. So I would say some of the biggest ones are The Big Short, Black Swan, Hedgehogger. For more private equity flavor, you can get Barbarians at the Gate. And then one that I found really interesting is Buffett, The Making of an American Capitalist. So those are all just interesting books, and by no means are they a comprehensive list, but the more you can be confident to discuss the industry, the better. And maybe some of these people are your personal heroes like Buffett, and so the more you know about them, the better. So what are firms looking for? I think overall, they're looking for a passion for investing. So some of you may be coming from a background that's not necessarily a direct feed into the asset management world, but if you can illustrate that you've really spent time, if you've invested time into this industry already through whether it be, internships or investment clubs or personal investments, that's something that one just shows you're really dedicated and committed to the industry, and gives them something to kind of talk about and test you on in an interview scenario. The other thing are just to bring investment ideas to them. I mean, they know you're students and maybe don't have a big personal portfolio, but the fact that you maybe have followed certain names or have an opinion on interest rates or gold or oil shows that you really put some effort into just preparing for the interview, but also just if this really is something that you care about and think about on a regular basis. Another thing that they're looking for on the asset management side that is actually very different from investment banking is that they're looking for someone that wants to own an asset longer term as opposed to working on a transaction. So something that was very different from being a banker to going to this side of things for me was that I wasn't just looking for the next deal and trying to push it through and having my managing director be motivated to earn a nice fee on the transaction. You really are thinking about the transaction before investing and signing up for this. The lockups on hedge fund to private equity investments can range from a quarter or many years, especially on the private equity side. You're locked in for 10 years sometimes. So they really are looking for someone that's not just looking to put new things in the portfolio, but someone that's excited about monitoring investments and analyzing things on a longer term basis. So I think if you can show that, that's really valuable as well, especially coming from an investment banking background. To discuss that transition is something to think about. And then just generally being informed on markets and industry trends. Right now everyone's bombarded by what's going on in Europe. So make sure you're up on that. And, just as earnings announcements come out, just have a general sense on how that's doing on jobless claims and just the high level macro stuff that everyone's going to be talking about on top of stock specific or trade specific ideas. Okay, so in terms of skills, we're generally looking for strong analytical and quantitative skills. That's really the core of the job, is analyzing data, analyzing trends. You have to have those skills, I think, in order to make the more high-level decisions. So that's really paramount. Another thing that will question you on is attention to detail. So I think almost every job in finance is going to emphasize that because there's really little room for error. So I think that's self-explanatory. Other things that are useful, and there's a whole list here, but valuation skills, statistics, portfolio management, all of these things that you may have taken classes on or have had experience on. Statistics, if you've had experience in a different industry but are still very strong, that's a very transferable skill that you'd want to emphasize. And as I already mentioned, basic macroeconomics. And then you may reach a scenario in an interview where they're asking you for a scenario analysis or a probability analysis, or if you have if you go in there with a trade idea, they can ask you what's the probability of this coming to fruition, or what's the probability of this falling apart. And so just to have that kind of critical thinking analysis skills is also important. Critical thinking, you really do want to know what could go wrong with that investment. More important than knowing what could go right and how you can make money on this is knowing what can go wrong, because that's how people lose their jobs, and it's something you always have to have at the back of your mind when you're on this side. Proficiency in Excel, and then something that you may not think about having a finance background is a lot of report writing on this side, and so it's not just numbers sometimes, and depending on who you work for, especially the bigger banks or pensions, they're very long, extensive reports, and so just to be comfortable putting together a structured analysis. Sometimes it's exciting stuff to write about, sometimes it's not, but So definitely both Excel and report writing is important. In terms of previous experience, definitely direct roles in asset management or in asset investment banking. People like that from the work ethic perspective, from your strong analytical and quantitative skills, self efficiency. They definitely like research analysts if you've been, you know, at different banks or even other, pensions. Just having had that experience of putting a buy or sell rating on an investment, I think is really valued. Having an opinion is really valued. Um, Statistical analysis. Right now, everyone is obsessed with knowing what they own, what could go wrong, as I mentioned before. So I think that kind of role in other industries is really valuable. And then accounting. I think a lot of people transition from being accountants over to the buy side, whether it be private equity or hedge funds or asset managers. I think that the skills you learn as an accountant are really important and really teach you about valuation. And so that's also a great path to change from into asset management. So the types of degrees that they're generally looking for is finance or econ majors at the undergrad level, or MBAs, CFAs, or KAYA, which is an alternative investment certification, and then CPAs and CAs on the accounting side. And there's generally just lots of finance and accounting classes, I think, in your background, or personal investment track record if you've got one, even if you don't have finance or accounting classes in your degree, but you've had a great personal investment track record. I think that's something that you want to share and discuss. Okay, great. The next slide. What to expect in the recruiting process. So the recruiting process is almost a misnomer in the asset management industry because it's a little less structured as opposed to the bigger firms that come on campus and run a real process. So I think the hardest part about the process is actually finding the jobs to apply for. My advice there would be network, use your network, use headhunters, use the alumni and career centers at your firm. Just it really is more of a high touch industry, and people look for recommendations. So if you do hear of a job, try to get someone to make the intro for you. So that is the hardest part is hearing about the opportunities in the industry. So once you've heard about the opportunities, I would write a typical cover letter highlighting your experience in finance. Target it to the sense you're applying. Make sure that you show that you've done a little bit of research on whether it be the firm or if you can, the specific people you'd be working with or the role itself. Draw on your experiences to emphasize how you fit into that role or firm. And as I mentioned, try to get a personal introduction if you can. It's nice to have. In terms of the first round, I think it can range from a very basic walk through your resume, why are you interested in the job, to skipping into something where they're trying to screen you for more technical and finance type of job. So just to whether it be get your opinion on something going on in the market or ask you a brain teaser or what you think about Apple's valuation or something like that. They may get into that right away. They may not. They're also really looking for your personality, so make sure you include stuff on your resume such as what you're interested in, whether you're a runner or a volunteer, music, concerts, anything that you might actually have in common with the person interviewing you will be sitting next to these people every day. Asset management actually usually involves a lot of traveling, and so you want someone that you can like sit on a 4-hour flight with and have something to talk about other than work sometimes. And it's a little bit harder to do this sometimes, but using LinkedIn and other things, it's great to research the people you're about to meet, see where they went to school, see if you have any people you know in common, and then I would prepare questions both for the people as well as the firm and the role. Make sure that you understand the role you're applying for, because they are not as well defined as first year associate at XYZ Investment Bank. So make sure you know what you're signing up for. The second round, trying to get more people in to see if you're a good fit. They'll probably ask you more technical and finance questions. They may get into details on specific investments. They may pull out hypothetical investment case and see what you think about it. Usually they'll give you some advance notice. Sometimes they'll send it to you ahead of time so you can not waste time in the interview reading it over. And then definitely come in with investment views and ideas. And then at this point, once you get into the second round, make sure you really prepared thoughtful questions for the interviewer. Okay. So I think that brings us to Q&A.
Yep. Sorry, I just unmuted my phone. Thanks, Maggie. That was great. There's a bunch of questions that have come in. Let me start with one, which is just, can you talk a little bit about the day-to-day difference between being in the asset management world where you're doing direct investing versus where you're doing indirect funds of funds? How does the day-to-day really change?
Sure. Well, I think when you're doing a fund-of-fund investing, you don't get as much transparency on your investments. So it's almost more of a monthly process than a day-to-day process. The official information that you get from your funds is usually a few days after month end. So analyzing that and preparing for calls or meetings with the funds is kind of your monthly responsibility, as well as if something comes up in the market, definitely give them a call to see how the portfolio is doing. But you get a lot less transparency as opposed to a direct investment in either a stock or a private company where you can probably see weekly cash flow and work on a little bit more granular data. And I would say the other thing is usually if you're working on the direct investment side, you're working on a more concentrated portfolio as opposed to with funds. You've got a lot more funds in the portfolio and you're following a lot more stocks or bonds or specific trades that each one would have, and so you're trying to keep on top of a lot more tiny trades than your fund investor.
Great. And let me just, before I go on to the next one, let me just remind everyone, if you want, feel free to, in the chat window or the Q&A window on the bottom right, to post questions, and I'll try to ask those. A question that came in was around what to expect in an interview, and especially what's expected in a, quote, stock pitch.
Okay, great. So when you're interviewing, I would say it's always better to be over-prepared. So when you're pitching a stock, a piece of advice I would have is, if you know that you're interviewing with a tech analyst, don't pick a tech stock because he's probably going to know it way better than you do. So I would try to pick something that's not necessarily on his day-to-day radar. That's just a tip. And what to expect on how to be prepared. I would say definitely know about the management team, know where the stock's been trading, what the industry rumors are, if there's any potential takeout targets or if it's a takeout target, and just to really, I guess the easy answer is think of it in a Porter Five Forces way. Think about that company and really like have a detailed analysis on all of those five forces to discuss. And then, um, I would say just make sure you've looked at all of their financial reports over the last year at least, and where analysts are predicting stocks to go and earnings to go. I would say just so you've got some sell side opinions as well. Now it's also good to pull up the 13F on the SEC site just to know who's trading that stock, who the biggest holders are, and if that's a risk as well.
Great, thank you. Question came in, actually two of them are related, but the first one is around transitioning from a sales and trading role into IM. I guess, can you talk a little bit about, maybe for the benefit of people, describe what the difference is between sales and trading and IM, and then how best does one make that transition, or what assets can you lean on from a sales trading role into getting a job in investment management?
Well, I think one, having a sales trading background is a great background to have to move to this industry, as long as you're willing to give up that, kind of minute to minute exciting day, as you are generally not moving assets as quickly. Even if you're at a hedge fund, you're usually holding on to the stock for a while. So depending on the fund, not all funds run like that, but a lot of high quality funds are holding on to their trades for a year or more. So as long as you're cool with that part of it, it's definitely a great background, because you've really thought about certain risks that we necessarily don't think about, such as like daily volume and those types of stats that are not as natural to some other people like investment bankers. Well, at least when I was an investment banker, I didn't think about that as much. So I think in terms of transition, I think it's an easy one because you've got the right finance skills, and it's just a matter of like looking for the right investments longer term, and so that would be my advice, is just to make sure that you're looking to move to something longer term, but you've generally got the right skill set, and I assume you've been reading broker research the whole time you're at the bank trading, and so moving towards that is just now proving that you can also do that research, that analytical deep dive as well.
Thank you. And the related question is, how difficult is it to switch from a technology background to investment
I
management?
think it's harder, but it's not impossible, especially these days. I think tech, in my opinion, tech and healthcare are actually both industries where there are very specific industry knowledge that you need to know to make a good investment. And so having that industry expertise, I think, is great. And I think even some hedge funds look for that specifically because they want to teach you their way of investing, and you've already come in with the industry knowledge and expertise. And so I think, going into the interview or trying to get a role there, introducing yourself, they already know that your finance experience is your weakness, and that your strength is really the tech side of things. And so I think you really just want to play that up as your strength, while proving on some level that you do have the capabilities to do the finance part. While you might not have the training, you definitely are interested and want to do it. So I think it's definitely one of those industries that are kind of a niche, and I think you can definitely make that transition. And especially if you're down in California or in a state or city, whether it be Europe or over here, that has a lot of tech industry. Around Silicon Valley, there's a ton of hedge funds and venture capital funds that need you with that background. So.
Thanks. And you mentioned earlier in the presentation a couple of resources for where you can find out who trades what. Can can you maybe go back and flash those up on the screen again?
Yeah,
That's
sure.
maybe where someone can find which hedge funds or which investment managers are active in technology.
Yeah, sure. So these are this is the site where I said there's a lot of industry publications, and they'll discuss funds with big positions in certain stocks, but the best way to see who are the biggest traders would be probably to go, you can pull up reports on the SEC or Bloomberg's a little bit better organized if you have access to it. But you can see who the top holders are. On Bloomberg, I think the code is HDS, and you can see who the top traders of that stock are. And another way to do it is to go on the SEC website and pull a 13F filing for a hedge fund. So you can do Blue Ridge, I think it's like Blue Ridge Management, and you can go up and see all their holdings that are publicly listed in the U.S. And then you can see, okay, they're holding Apple, who else holds Apple, and those would be the hedge funds, yeah, you could target by applying or emailing if you're looking for a tech-specific role. I mean, some of the big ones for tech, I think, are Sequoia. They're a big VC firm, and there's, a ton of different ones in San Francisco. There's a couple of ones in New York as well, but definitely San Francisco is kind of the hot spot for tech hedge funds in North America anyway.
Great, thanks. Can you talk a little bit about there's a clear investment banking sort of process. How would you compare that recruiting process to that of private equity or investment management?
Sure. I mean, so I think investment banking was one fairly condensed and pretty structured in the sense that, like, whatever bank you were recruiting for, it was a pretty standard process. Usually you'd have like a phone first round and then go in for a second round with one person and then a super Saturday, and they'd kind of pick their favorite candidate. I think private equity, just asset management in general, whether it be private equity, hedge funds, pensions, takes a lot longer. They're they're looking at investing in you long term, so they're taking a lot of time to get to know you, see how you think. So that's just point number one. It's a slow and longer process. Two, I think they really are not very structured. So you can meet like the CIO before you meet the first year associate, and it's just a matter of like who's available. And so in terms of who you're meeting, always ask, because they can kind of throw someone senior in just because he happens to be in town that day. So it's a lot less structured in that sense. And sometimes the interview itself will not talk about finance whatsoever, and they'll just kind of go off, talk to you about something totally different just to see how you think about things, and that you have opinions and or have conviction, because I think the problem with transitioning from your first job where you're kind of told what to do and what to think, and especially as an investment banker, I was told, when I could go to the bathroom. This one, you're definitely more flexible. They're looking for people that are a bit more self-starters, and so they're really looking to get to know you and see if you can fit well on the team, and then hopefully one day kind of have your own investments and not need to be handheld. So it's more of a personal process, I think, and then it varies on fund to fund. Every fund is a little different in terms of philosophy, so try to see if you can research that. I mean, some of the bigger funds like Bridgewater have very famous portfolio managers and very famous philosophies, so if you're going to go into a place like that to interview, be prepared. The same with some of the more famous hedge fund managers like Steve Cohen at SEC. Just know who they are before going in and what kind of culture you might be going into, because that can also kind of help you set the tone on the interview. Would be what I would say.
Great, thank you. And the last question we have is one I'm happy to end with this one, but you clearly, and you mentioned it up front, you love the industry. It's something that really resonates with you. Can you talk about and maybe use yourself as the example, but what people are really happy in this career? Like what makes someone who's very satisfied and fulfilled going and choosing this career path as opposed to another one?
Sure. So I guess someone that really is passionate about finance and not doing this for the money. I think that some parts of asset management pay well and some don't. Particularly, endowments and foundations, they're basically nonprofits, so you're doing it more um, for a good cause, I guess. But you really need that passion for investing, I think, especially in markets like right now where it's not, you're not making money every day anymore. So um, I think people that are comfortable with a certain level of risk in their lives, it's, not a safe industry. So to be comfortable with that, and I think someone that's intellectually curious and always asking what can go wrong, you know, what, how can we make this portfolio better? Some places you're not doing new investments or not very often, and so just constantly, being excited about what you currently own and asking questions about that. And I think, someone that likes to travel or is comfortable with traveling a lot and is just generally flexible. I think it is a very unpredictable industry, and so you can be pulled in on anything at any time, and I think you just really need to be flexible. But if you have anything else to add, please go ahead.
Great. Can you maybe just flip to the last slide and I'll just close it out?
Yeah. Sure.
So that's all the time we have today. Clearly, I think everyone has, and I've learned a lot, and it's helpful to hear your years of experience.